Welcome to the Passive Investing Show. I'm Ashley Wilson, and I'm joined here with my co-host, Jay Scott. This episode was filmed live at GoBundance Miami. Unfortunately, I was unable to be there, but Jay did a terrific job interviewing Adam Jason, the co-founder of the Green Coffee Company.
Yeah, I had an amazing time at GoBundance in Miami, Florida a couple weeks ago. I had the opportunity to interview a whole host of founders, entrepreneurs, business owners, and today's interview was with a gentleman named Adam Jason. And I love this interview. So Jason is the co-founder of the Green Coffee Company. And on this episode, Jason talks about how he and his co-founders were able to build one of the largest coffee growers in Colombia, South America. He talks all about how they bootstrapped the company, started their manufacturing on another continent, how they've been able to raise 3 rounds of financing so far, and how they have now gotten to the point where they are in talks with some of the largest coffee companies in the world for distribution deals and getting their coffee out to basically the entire world. Now, the Green Coffee Company is getting ready to raise its next round of financing, and projected returns are almost certainly going to surprise you. So if you want to learn more about the Green Coffee Company, about Adam Jason, and potentially invest in their next round of financing, this is the show for you. So without any further ado, let's welcome Adam Jason to the show. Adam, welcome to the Passive Investing Show.
Jay, it's a pleasure. I've been listening to you for a couple of years, so I'm glad we got a chance to sit down and talk.
I appreciate that. So I love your story. I love the investments that you're focused on and that your company's focused on. Before we get there, I'd love to hear a little bit more about you, where you come from. What's your backstory? How did you get to the point where you became part of the Legacy Group?
Sure. I guess I'll skip over some of the details, but give you the high-level picture. Buffalo, New York kid, born and raised. Went to law school after kind of going the traditional path of high school, college. Played some football in college, did all that. Ended up finishing college, and in many ways, I'm sure people can relate, not knowing exactly what my next step was going to be. I actually studied physical and health education in undergrad and realized it really wasn't for me, but kind of a product of my background, playing sports. The people I was around were all coaches, teachers, etc., so I thought I'd kind of follow that same path. But realized it wasn't for me, was looking for something else, was kind of intellectually curious, decided to go to law school. Really embraced it, kind of like some of the conversations we're hearing today of people moving from one competitive endeavor to the next. You know, that was really me, from sports to law and my kind of education and self-improvement. Graduated from law school and then took a job with Jones Day, which at the time was the largest law firm in the world. I went into their SEC capital markets practice. Started representing Fortune 500 companies, primarily out of the Midwest, Sherwin-Williams, Macy's, names like that, helping them raise money, public and private equity, debt, taking companies public. I'd worked on the IPO for Yeti Coolers a couple years ago, which is a name a lot of people know and like, with the lifestyle component that they have. I practiced law in Cleveland for about six and a half years. Got moved down with the same firm to our Dallas office, started focusing there on oil and gas, and this is all from a business perspective. Of course, if you want to dive into personal stuff, we can. But was working in our Dallas office for about a year and a half, then got a job offer down in Houston. In between Dallas and Houston, I had a month off, and as we talked before the show, you know, my background and was never, you know, travel international, see the world, take a year off and explore, find yourself.
You're from Buffalo.
Just doesn't
the fact
work
that you
way.
Left the city was a big deal.
The fact I had a passport and that I had left the city was, yeah, right. It's just that kind of mindset, which is great.
My in-laws are all from Buffalo, so I can say that.
That's why I know I can say this without offending you also. So you know the scoop. But I had heard some good things about Colombia. I was learning some Spanish at the time, living in Dallas, and it was just a New Year's resolution, and you know, it's one of those things that kind of picks up momentum, I guess. And so I decided to go down to Colombia, study some Spanish, see what the market was like, look for some investment opportunities, and I just fell in love with it. I landed in Medellin, Colombia, which a lot of people are familiar with. I spent a month there and started making connections. I met my now business partner, who at the time, and we'll get into it, was starting the green coffee company, which is a prime focus of our now investment portfolio. I went back to the U.S. to start the new job at the law firm in Houston. And my now business partner, who I had met, was just starting the fundraising to get the business off the ground for the green coffee company off the ground in Colombia. So he needed.
What year was this?
This was 2017.
Okay.
So he needed someone with experience in capital markets, how to raise money, primarily from U.S.-based investors. What's the legal compliance around it? What's the strategy behind it? How does it all work? And then down to the fundamentals of what documents do I need? What does this all look like? So I started helping him just in my free time from back in the U.S. while I was working at the law firm. And then I was at the point in my career where you basically, at that point I was about 9 years in, you basically decide, do I become a partner at the law firm that I'm at? Do I go in-house and work for one of our clients, or do I do something kind of completely different? And I really had the entrepreneurial bug inside of me for a long time, and I think I was kind of getting all I could out of the big law firm experience from a connection standpoint, learning standpoint, but I got to the point where I was ready. I could also look a couple of years ahead and see that the life of the young partners ahead of me was not something that I wanted then, and I knew it was also something that, frankly, people ask me like, oh, weren't you scared to do this thing or move to Colombia, which is kind of where we are now and the end of the story, jumping ahead. But, I knew that world would be there for me if I really wanted to go back to it. So, January of 2018, I sold everything, slept on a air mattress for a couple weeks, and then moved down to Colombia and started doing what we're doing now.
Awesome. Okay, so let's talk about the Green Coffee Company.
Yep.
Launched in 2018. I'm going to kind of give the summary. You've now raised 3 investment rounds.
That's right.
You have a 4th one coming up soon.
Yes.
Let's go back to the beginning. So what was the thesis of the company? What was the thesis of the investment for your investors? What was the goal?
My business partner, who originally founded the business back in 2017, had a good network of primarily commercial real estate investors, U.S.-based folks who were looking for diversification, both with respect to market, but also with respect to industry, and but still wanted the, I guess, comfort that comes with collateralized asset-backed investments, looking for some exposure to agriculture. So really the thesis was consolidate infrastructure, consolidate farms, sell a product that basically worldwide is infinitely liquid, and generate a cash-flowing business that could fit in somebody's profile or portfolio, nicely, because they already know that commercial real estate cash flow basis. What we've seen since then, and since 2017, we've taken the business from a modestly yielding collateralized asset play to becoming this year the #1 largest coffee producer in all of Colombia, and kind of Colombian coffee known the world over, right? So, but what we've seen with that is the potential really to kind of take the roof off from a return perspective. If you're trading in multifamily assets, commercial real estate, to some extent you're within a cap rate, and it's going to trade on that basis. When you get into the, I guess, private market, private business space, you have that ability for those bigger exits, bigger multiples. So you start getting interest from private equity. You start attracting interest from buyers in our industry, such as a Starbucks or Nestle's or some of the clients that we do business with. And then using my background of the team, I think we have access to the public markets in the U.S., where you're opening yourself up to a whole nother potential return profile, where you're getting retail investors involved, people that have brand loyalty getting involved. So we've really tried to, I guess, extend the optionality that the business has for our investors. we're looking at, I think many multiples on return higher than you would get if it was a, single family play or multi-state.
So I definitely want to get to the returns because those are important. But I also, just from my own understanding, I like to understand, you use the term asset-backed collateral.
Yeah.
And basically what that means is there's stuff of value that the company owns that even outside of the revenue that the company is generating could be sold off. So let's talk about that. So what is the company? So I assume it's farms, it's a production facility, it's a distribution facility. What does the company itself look like in terms of what it does day to day?
That's right. Yeah, the business is primarily focused on B2B coffee sales.
Okay.
Selling in bulk. Green coffee is the main product, which is basically the pre-roasted bean. So they call it green because it has like a greenish hue to it before the coffee's roasted. But we'll sell in bulk to large importers, exporters. We sell a lot of coffee domestically within Colombia. The assets are, right now we have about 4,700 acres of coffee land in Colombia, 2 coffee processing facilities, which we're talking kind of before the show. We've implemented technology used in the flower space, the olive space, to really kind of create one-of-a-kind infrastructure, which is important for consistency and quality. The clients that we work with, the Starbucks of the world, those guys need coffee year-round, and they need it to be the same, and they need it to be dependable. So a lot of our investment is thinking from the end of how can we make sure we're meeting the demands of these clients. We continue to add on more revenue streams to the business as we move forward here. A big focus going forward is selling the roasted coffee, which is basically, we want to be in the market of selling to hotel chains, selling to grocery stores, selling to branded companies that are moving large quantities of coffee. The reason being, the farther down the value chain you get, the higher the prices go. We take basically a $3 per pound product and turn it into $6. It also provides a nice hedge against fluctuating commodity prices. So if you're trading just green coffee with importers and exporters, you're always subject to what markets say. If you're selling to Starbucks and you have a fixed price contract, obviously it's a lot more stable.
Well, let me ask you a question. So I'm not going to pretend to know anything about coffee production or Colombia, but coffee and Colombia are pretty synonymous.
Right.
And so I hear the fact that you're now the largest producer of coffee in Colombia. What's your competitive advantage? How did you get from a startup in 2018 in an industry that I imagine has been heavily entrenched in Colombia for decades, if not a century or more? How did in 5 years you grow to the largest production company?
There's a couple, I guess, macro factors in the industry in Colombia. One, it's very decentralized. It's basically, the stat is 95% of all farmers own less than 3 acres of land. So there's only a few big players. The other issue is you continuously have kind of a generational turnover where a lot of family wealth is tied up in these farming assets, and as they pass further down the family chain, the grandfather wanted to be a coffee farmer, maybe his son kind of wanted to be a coffee farmer. Now the son wants to live in Miami, and to tap into any money the family may have, they need to liquidate this asset. So what we've looked at are where are kind of the prime coffee regions in the country, where can we buy at scale, and where does it functionally work to be able to consolidate infrastructure. The nature of kind of the historical investment profile in Colombia is also relatively low. You're not seeing, like we mentioned, about 30 million to date that we've invested. That sounds small, especially, in a city like Miami, maybe you get a couple of apartments. It's a huge amount of money in Colombia, but it's an amount of money that nobody really has committed to that space in a very long time. And you don't see like a Starbucks or Nestle or those guys coming in because the process of acquisition, negotiating with a family, but the family is 3 uncles, 2 nephews. Everybody's got kind of a little piece of things. It takes time. I think from a real estate perspective, I would analogize it to, splitting the difference between, call it, multifamily and huge apartment buildings or a huge hotel, and kind of finding like that boutique hotel space that private equity and the big boys aren't going after, but there's very few kind of individuals who could be doing it alone. And just through a process of couple rounds of financing, couple rounds of acquisitions, we've been able to consolidate that land.
So let's talk. So I know when I look at investments, number one factor for me is the team. So let's talk about what does the management team look like? How do you fit in?
Yep.
How's the company structured?
Yep. We have the company structure, and this is a good question because a lot of people say, Colombia, why would I? The company is structured out of Delaware. We have a Delaware holding company, so all our investors are holding U.S.-based equities. The team has a 3-person board of directors. It's myself, my business partner, who is an ex-PwC accountant focused on mergers and acquisitions. He worked all over the world. He's from the U.S., but worked in Bermuda, Hong Kong, Beijing, started the company down in Colombia. International experience in terms of the M&A game. And then the 3rd member of our board of directors is also our president and CEO, 25 years in the Colombian agriculture space, half German, half Colombian, really focused on flowers. People say flowers to coffee, what's the kind of connection? As we were talking about a little bit earlier, flowers is really the most sophisticated, one of the more sophisticated agriculture industries within Colombia, and I think in many locations because of the short shelf life of coffee. 70% of flowers. Of 70% of all the flowers in the U.S. come from Colombia. So the team that we have, our CEO, when he finished working in the flower space, they were doing about $250 million annually of sales globally in the flower space, and he brought his agro-industrial engineering background to what we're doing in coffee, plus the logistics experience, plus the connections in Colombia, which are very important. All that know-how to the coffee business.
So basically, efficiency of distribution and logistics.
It's 100% the macro game. We have great agronomists on the ground. We hired the ex-head agronomist for Starbucks in Colombia, now is our head of agronomy. We've tried to build a business that is, of course, strong operationally, but also, I would say, well run from a strategic standpoint, managing things with investors. A lot of our expansion is going to depend on M&A and entering the U.S. market to a greater capacity. So my background raising capital, legal, my business partners in terms of M&A, I think all that is going to be very valuable for the expansion and exit goals that we have.
Awesome. So we talked a little bit about the fact that you've now gone through 3 rounds of private investment.
Yes.
And I want to talk a little bit about capital stacks. So,
Sure.
So how has that evolved? So when you first started your seed round in 2018, what did your debt and equity structure look like, and how has that evolved over the 3 rounds of raise?
People who know real estate will think that we're crazy from a kind of capital stack perspective, but there's also macro factors to discuss. So today, we were the first funding round, which is our seed funding round, which is kind of the get off the ground, plant the seed type. Literally, coffee. This works perfect for this. Was $5.7 million. We raised it from primarily high net worth accredited investors. Our average investor today is about 100 to 200,000 in terms of commitment amount. That 5.7 at the time was the only capital that we had in the business, plus the business that the partners and others put in. We did that back in 2017. We then did a smaller raise to do another round of acquisitions in 2019, 2020. Did about 2.6 million. Same structure, all equity to that point. The only debt we really would carry at that point, we do a lot of, when we do the acquisitions, we'll seller finance the transactions. So basically we take control of the farms and we're paying them down over time to the landowners. The last funding round we did, which was our Series B, we concluded it at the end of 2021. We raised about $15 million. And then we brought in a little bit of bank debt at that point. So right now, from a balance sheet perspective, we're looking at about $30 million of equity and then about $2.5 million of bank debt. And then we have another $4 million or so of debt from the seller financing transactions that we're paying down over the next year and a half or so.
Got it. So it's mostly equity. I mean, which makes sense. I guess it's pretty hard to raise money for a business like that. First of all, and second of all, being in Latin America, you're not going to get necessarily a lot of U.S. based banks interested in those types of debt.
The U.S. banks are not really interested because they can't well collateralize the assets, at least from their own risk management perspective. You know, of course, there's major banks working in Colombia. The bank that we took on last year, we got it about 5.31. Not about, it was 5.31% to be precise about it. But that's a good rate for Colombia. I mean, you can easily see, you know, you try to get a residential mortgage. If you were paying 11%, I wouldn't be surprised. So what we really had to do was build an asset base, and then we could start thinking about borrowing against it. But the idea of, you know, I'm going to borrow, 80% of the cost, it just doesn't really work that way in Colombia.
What did the projected returns look like early on in your seed Series A rounds?
We always focused early on the cash flow perspective. You know, we always targeted kind of 8% annualized from a cash flow perspective, but that was kind of the cap in terms of what we thought from an overall. You know, we expected some appreciation. Always buy at discounts in terms of the land, but that required a buyer that was willing to take on really kind of a business that I think would not be at the scale necessary to get the huge multiples. So we were looking at, 8% annual cash flow with, 12 to 13% kind of IRRs or overall return over the course of the investment. As I mentioned, as we've scaled up, we've seen our comparable companies change shape as well. Now from, kind of looking at ourselves as a commercial real estate player where we're talking about cap rates, now we're looking at, okay, what are comparable companies on public exchanges getting when they're going public? So you look at a company like Black Rifle, great consumer brand, great business. They went public here at the start of 2022, started trading at 10.4 times revenue. Saw a company called Nusi last year. It's a coffee roaster out of Austin. Those guys had 1.5 million in revenue and reached 100 million in terms of market cap, and they had like 9.5 million of loss. So we've taken kind of modest projections and said, okay, if we can get to between 5 and 7 in terms of multiple on our revenues, I would not be surprised if we're very soon a $100 million revenue company. I think.
So what were revenues last year? What was EBITDA?
Yeah, last year we did 1.29. We've already, to start 2022, we've already done about 2.7 million.
That's gross.
That's gross. Yep. We were looking at doing about 7 million for the year. I think kind of what we're seeing, and based on what we've done in the first quarter, we're ahead of our timeline in terms of coffee production for the year. I think 15 is a very reasonable number to get, but we're staying ahead of what we've told investors for sure. And
what do the margins look like in this business?
Scaling up over time as you kind of get the economies of scale from the infrastructure. We always target about 30 to 40% in terms of margin. It's split across several revenue sources. Our highest margin business is our coffee sales from our own proprietary production. We also have a trading business where we're buying coffee from local farmers, and then because of the certifications we have, the processing that we can do, we can sell it at a higher margin, but that has a higher cost of capital because we have to buy the coffee first versus producing it on our own. But on a blended average, we're looking at like 30 to 40% annualized.
Got it. So on 15 million in gross this year, it could be 5 million in net and capitalized at a 7 to 10.
I think more realistically this year it'd be like closer to 3.
Okay.
As we add on more of our own production. Like this year, we're going to have about 4 times the amount of coffee in production than we did last year, because we did a lot of planting a couple of years ago. It takes about 2 years for a coffee tree to become active. So some of the planting we did in 2020 is now going to be active. We're also getting a higher yield on the already producing coffee as the trees mature. So I think we'll have about 4 times as much coffee in production this year as we did last year, but it's still not optimized to the extent that we can comfortably like, okay, this is 30 to 40% margins annualized.
Got it. And what do multiples look like in this industry? Typically, you mentioned 7 to 10, maybe.
I mean, those are probably conservative. The lowest we've seen was like 7.3, and these are there's not a lot of B2C coffee companies that can go from or B2B, B2C coffee companies that can kind of go farm to cup. A lot of people are focused on the roasting portion of the process, or they have a consumer-facing brand. So, what we're seeing from basically, okay, we can go farm to cup with a sustainability story and also the scale of being number one in Colombia, which has impact in the industry. I think that we always model things conservatively because we don't want to overpromise and underdeliver. But 7 to 10, I guess, would be a fair representation, which for our investors would mean, I think, closer to like 8x in terms of if they were to come in today as an investor.
Got it. In terms of revenue streams, any auxiliary or secondary revenue streams that you see potential for to grow top line?
Yes. So coffee is in many ways like the oil and gas space, where you have your crude oil product, but then you have natural gas and all the petroleum products that spin off of that. The way it works in coffee is, if you're familiar with it, coffee will grow on the tree. You have the bean, and then you have about 4x the amount of weight that's in so-called waste material, pulp, mucilage, cherry. All of that waste for us right now is essentially garbage, or we use it as fertilizer. What we're studying right now is the ability to use that for other applications, whether it's energy production, alcohol distillation, which a lot of people are excited about, kind of a B2C product that's similar to a vodka. All of these things have huge potential, one, for us because the cost is so low, because we would otherwise throw it out or burn it or use it in a fertilizing capacity. But you also can find huge upside in those markets. If your cost of production for a bottle of vodka is 2, even if you're selling it at 10, which would be pretty bad, you're in a nice place from a financial perspective. So I think that some of the byproduct work that we're doing has potential to even surpass the core fundamental business, because we have so much of that. Just for context, this year we'll have about 13 million pounds of coffee byproduct. So if you're converting that into revenue sources, there's money to be made there.
I imagine investors like to hear that.
They like to hear that. We're being resourceful.
That's awesome. Let's step to the other side of the coin, risks. Where are the risks in this industry and this business maybe specifically?
The risks are in agriculture always going to be weather. Monitoring that. This year was an interesting year. We saw really the global market prices for coffee are controlled by what happens in Brazil. Brazil's the largest producer of coffee globally by a large margin. They had a lot of droughts this year, which caused a big spike in commodity prices, which was something that we were hoping to take advantage of in Colombia, where we didn't have the drought conditions. But we had a lot of rain this year. So what we saw was a lot of our expected production from the end of the year last year getting pushed into Q1, Q2. So it really depends on your kind of the way you see the the business. If you're saying, okay, at 12:31, I want to know what the results are, it doesn't really work that way because you're so subject to kind of weather conditions and how kind of things just come together. So we always tell investors to look at it holistically, look at it over a 5-year period, and kind of see what the patterns are. The weather's the big one, which we have to manage. A lot of that is planting coffee at the right elevations. The one thing obviously people are worried about is climate change and heating. The one way to avoid that is to stay at higher elevations, or at least mitigate the risk. I don't know if anybody can really truly avoid everything. The technology we've introduced in terms of meteorological studies, having the stations on the farms where we can see, okay, this area is receiving too much heat. We need to start planting banana trees here to start providing shading, and just managing all the kind of weather around the farms and around that kind of scale of land is the biggest challenge.
And so how about geopolitical, macroeconomic, supply chain, any risks there?
We've had this year impacted people, I think, across the world, really, with being in the food space, the situation with Russia and Ukraine in terms of getting fertilizers. Fertilizer is, being constrained because of what's going on in the conflict and the ability to get just the products that you need to create fertilizer. What we've done, we bought like 16 containers to basically fulfill our needs for the year, and then some more so we could sell it to the local farmers who can import in bulk to try and recoup some of our costs. I expect that to push up costs some that we'll have to balance out through other mechanisms within the business. That's one people are dealing with. We didn't have too many issues in terms of the transportation issues and ports being jammed up and the things we saw kind of really called middle of last year with the pandemic and moving goods. Fortunately, we weren't too impacted by that. And then we've been fortunate from a political risk perspective and relationships. Because of our scale and because of the foreign direct investment into Colombia, people want us there and they're excited about what we're doing. We got accepted last year into the Council of American Enterprises, which is the multinational lobbying group in Colombia for all the multinational businesses doing there. So if you go to the website, you'll see Green Coffee Company next to Hewlett Packard, Ford, GM, Pepsi. Comes a lot of benefits with that. We just hosted an event for the CEA, which is that organization, this past Tuesday. Some of the team met the president of Colombia and other important people in the industry. The town that we're in, we've become the largest employer. And those things carry weight when you're talking about, okay, we need this favor or that, or we want to meet this person. And scale has really been our biggest friend in terms of being relevant in the space.
How about macroeconomic? Is this recession resistant or very recession sensitive type investment?
I think land is maybe one of the best inflation hedges available, and especially when it has actual producing commodities on it. What we see is commodity prices rising because of inflation. Everybody's paying more for coffee now. At the same time, that drives up the value of the underlying land that's supporting that coffee. So a lot of people will look at real estate or gold, or people are looking at cryptos now from a hedging perspective. Maybe I'm biased, but what I see is land, productive land, and you'll hear it from people like Warren Buffett, or Bill Gates is the biggest landowner in the U.S. right now. A lot of these guys are doing that because they see that it's a high upside business with really little downside from to the extent that that land is pretty much always going to be there.
Yep. And not to disparage the product. I mean, I'm a huge coffee fan,
Yeah.
but it's a drug, and so it's
a drug.
So from a purely macroeconomic recession resistant,
Yeah.
demand's not going to decrease, I imagine, too much if there's a negative economic downturn.
The statistics say that coffee consumption is going up continuously globally. Right now, it's about 2 billion cups a day that are consumed. That'll continue to grow, and it should grow even more as markets and that people don't think of as traditionally non-coffee consuming become larger coffee drinkers. Like China is a country that basically throughout its history has been a tea drinking country. You talk to Starbucks, or you read about they just brought back Howard Schultz, the ex-CEO, who's now the CEO again. Their key initiative is to drive up the number of Starbucks that's in China because that market is so untapped. So if you can take a fraction of that population and bring them into the coffee space, it's just something that's so ingrained in culture globally. I just don't see it going anywhere. I don't know most people that can even start the day without a glass. I'm definitely one of them. So
I'm the same way. Exit strategy and timeline.
Yeah, we told our investors back in 2017 that we thought we'd get to an exit 2025, 2026. A lot of the rationale for that, it's not just picking a year out of thin air. A lot of the rationale is planting schedules for coffee, optimization, and when we can have basically the most valuable product that we could sell to private equity or that we could sell to Starbucks or Nestle or somebody who would be interested in picking that up, or that would be ripe enough and I think productive enough for a public market exit through an IPO, something like that. We're still on time, I think, for a 2025, 2026 exit. Our revenues, I believe, are going to scale up nicely. Some of the things that we're talking about in terms of the byproducts and other mechanisms for some additional profitability, in terms of the modeling we've done and what we're seeing are not even factored in. But I would not be surprised if it's a, call it $500 million company in a very short period of time, which for investors coming in now, if they did, would be a great return. We keep the valuation low so that we never have down funding rounds. We don't kind of play the Silicon Valley huge multiple game for funding rounds. We like to give people a product that they can invest in that has huge potential for upside. And then there's a lifestyle component. We get a lot of guys that come down to the farm. It becomes a tax write-off for them for the because now they're invested with us and enjoying the experience of being invested in, and which is really one of the benefits of private market investing is, you're with the management team, you're able to see the assets, you're kind of able to be more involved. So, to answer your question, I think 2025, 2026, investors coming in now, I would expect about 8x in terms of return.
8x. And when you say investors coming in now, so I know you've done your 3 initial rounds.
Yeah.
By the time this airs, you will probably be in the middle of your 4th round. So when you say 8x, that's for your 4th round investors.
That would be
the round that's open now.
That would be, yeah. So we continue to see basically more and more consolidation in the industry and more buying opportunities. The funding round we did last year basically allowed us to become a cash buyer, which is giving us great discounts, from the days of seller financing, and it's, you don't have as much leverage in terms of negotiating ability. Now with access to capital, people are approaching us to sell. We're seeing a ton of opportunities. We think we can really kind of add on to our existing farms and add to expand to some other strategic regions around the country, and that'll require a little bit more capital to do so. So we're going to be opening another funding round now, and it'll be but duplicating what we've already done in our current coffee region in other areas around the country and extending the business to go further down the value chain into the U.S. and open up some more of the international sales that we're focused on.
Got it. Projected 8x at this point, that would blow out the original 12 to 13% IRR projections for the early investors.
We undersold ourselves, but the early investors will do. The early investors will do well, and then we always give them a chance to kind of catch up on their positions and participate. And we've had guys who have been with us every funding round. Our largest investor is about $4 million. Is a wealthy individual, and then our average ticket size about $100,000 to $200,000 from our high net worth and accredited investors. I expect that this will be probably our last retail funding round. I think what retail, I mean, kind of individual before we start talking to more institutional type folks. The reason being, I think we're going to need some of those investors to be able to get us to the exit that we want. Having a Starbucks as an investor, or Pete's Coffee or Kona Coffee, some of these names give credibility to the business, which adds value for all the people involved, and they frankly they come in with larger ticket sizes, which is something we're gonna need here, I think, in the short term.
In addition to the potential equity growth, what does cash flow look like for new investors getting in? Are you still targeting that 8% annual?
We have a 6%. Basically accruing dividend. So if we pay it, we pay it. If it doesn't get paid, it'll get caught up at the exit. So there's a floor for anybody who comes in, and that 6% is added into that cumulative return. So it makes up part of that 8x. So they basically get all of that before management participates or anything like that. It would be kind of similar to what you'd see in like a real estate syndication.
Perfect. So for any of our listeners that might be interested in getting more information about you, about the Legacy Group, which I guess is the syndication or the funding entity, or Green Coffee Company, how do they get in touch with you?
Yeah, we manage everything through Legacy Group, which is our investment fund. So if you want to contact me, you won't see me on Green Coffee. It'll be on Legacy Group. You can find me by email. It's adam.j@legacy-group.co. You can find me on LinkedIn. For the Go Abundance guys from our conference here today, they can find me in the Facebook group or however. But look forward to connecting with as many people as possible.
Fantastic. And for all our listeners that want to know a little bit more about Go Abundance, I think you're a good example of the type of talent and expertise that's available here. So this has been an amazing conference, and really appreciate you being here and talking about Green Coffee, and looking forward to hearing more about that next funding round.
Yeah. Thanks, Jay. I appreciate the time. It was a pleasure to finally meet you in person after listening to you for a couple of years here.
I appreciate it. Thanks, Adam.
You're welcome.